Doc here. Doc here. Good Friday to all. Good morning, good afternoon, and good evening. We're checking out the numbers, the spin and the wild and the action and the whole bit here. And let's. I have it even up on the screen at the moment. I think you might be able to hear it. I'm not sure. Let's see if I raise my volume up. No, you're not hearing it. I'm hearing it. Good. I'm glad because it would be bleeding over. Let me slow this volume down. Anyway, you can see here I'm going to throw it up on the screen. Made a nice little punch. We'll take a look at how the currencies move from this action. Where is it at? Right there. There it is. Let me lower the volume there. There it is. You can see they were just showing it a few seconds ago. You can see it on this is the stock indices right there. We can make, this is the S&P 500. Let's see. Let's put that up there like that. There's the S&P 500. And the news came out right here. And you can see they're running the market up. Let's check it out. Let's go over and see what the currencies are doing here this morning. Let's see what the Swiss franc looks like. All right. Let's see right there. Let's open that up. And let's go over to J4X and see what J4X looks like. This could be a fun-filled morning. They needed to have I was just explaining to one of my traders about this. They need to keep the stock indices open because of all the funds that have that are public. When you're a public company, in other words, you floated stock in or you took money in from the public and you're registered, you need to follow your incorporation manifesto. And if you don't follow your incorporation manifesto, it makes things, 916,000. They were looking for like 600 and some odd thousand. That's a big number. That's cool. That is really cool. I'll just show it to you right there. You see it jumping up on there. They were looking for 670,000 or something like that, or 60,000. Speculation was as low as 617,000, and it was 916,000. So that is, the virus environment is starting to die off, and people are getting back to work, which is a very positive thing. And let's just check out on J4X, see what the Swiss is doing here this morning. Right there. And let's see what it does up on the Chicago Quant on a bar chart. Right there. And we're pushing it down a little bit on the Chicago Quant. Let's see if we can move this down a little bit. Can we do that? No, we'll move this up. That's what it is. Like so. There we are. And you can see here on the stock indices how they're lifting it up. The action is, again, the COVID scare, COVID event, whatever you want to call it, is starting to dissipate. And with it, we're going to see more aggressive markets, especially with all this money being plowed into the economies. That money has to go somewhere. I mean, it's going to go into the pockets of, obviously, different entities, good and bad, more bad probably than good. But in the end result, it's going to be out there, and it's going to be plowed into the marketplace and in the currencies. And then let's go back over to there. And you can see, is that it? Right there. There we go. No, there it goes. Now, why am I not seeing that? I'm confused. That's there. Why are we not seeing our chart? There it is. And so you can see right there, just a little downwardly action. Nothing major. Let's widen that out. There's a Swiss. You can see that compared to the Hinky Ashy. You see the Hinky Ashy is just a little red. That's pretty cool. And still over the 94 area. So the dollar is just a little weak. I guess they're thinking, wow, this is pretty cool. The economy's growing. And we have as we go back, you can see, let's see, we go to another screen, same screen, just a different chart. Go right to there. You can see this is the S&P 500. This is all-time high territory. Same thing going on with the Dow Jones Industrial Average, and let's see where the what they call the tech 100 on the Dukascopy. It's the Nasdaq 100. They refer to it as the Tech 100, which is truly very descriptive as far as I'm concerned. It is. It's a good description of it. And you can see it's playing around. We're still about 500 points off from its all-time highs. But still, you can see that strength. You can see that wild action here. They, just as soon as the news came out, they blew it up to there. Then they took it back down again within like a few seconds, and then took it back up to there. And now we're kind of trapped in the middle of the range, pretty much where they started from right before the announcement at 7:30. There's a 7:30:06. So it was right there and exploded up to there, which is kind of funny in the sense of how did they know? You know, they know the range instantly. You know, the money, all the money's falling. They all go to the same graduate schools. They're all trained by the same books. You know, the manuals of finance and so forth. So, you know, it's just a combination of it all in the end result. And so we see our unemployment number in the United States here now down into the 6 area. Not bad. When Trump had it rolling along, it was down to 3.1. So they still have 50% to go, and I'm sure they'll get there. At least into the 4s, that's for sure. All right, let's go back to the currencies, and we'll go through our magical tour there. Mostly, I can see we have 6, 7, 8, 9 people showing up. That's good. There's 5 there now at the moment. And you can see the Swiss, like I said. Now here's the euro. The euro was flirting with the daily buy there yesterday with the red and green. You see they're starting to perk the head up there, right there. And so there's a little strength there, but we're in that weekly sell, as you can see, right. Oh, you can't see right there. I'll show you. You can see we're in that weekly sell, so it's awful hard to take it too serious. This is just another dead cat bounce, more likely, but it's pretty good. We have a couple up candles, and there's a third one today, so we'll see if they hold on to that or if they start to weaken a little bit. Same thing with the cable. Cable did close in a daily buy last night, and it's a little bit firmer. None of this stuff is exploding at the moment. We can put the little green line in there. There's right there. So just a little firmness in there. But again, same problem is you can't really take the trade because right here we've been in a weekly sell for just a couple of weeks now. So all it's doing really is climbing back up to the where it went into the weekly sell. And then from there we go. Let's see what the Turkish lira is doing right there. They went into the sell yesterday. Surprise, surprise. We're expecting to see this thing make it to this dotted line, so maybe it's going to have to do another little chug and then back up. Thought we would get there off of these 2 days. Really surprised. It got to all-time highs, I guess you could call it, or all-time lows, however you want to describe that, and then rolled over on us. So when we went into the buy here, we were expecting to go up and go just a little bit further up to there. It didn't do it, which is very rare. It is enormously rare for our math. It should have done it. It's something I've not seen before. Maybe it's just the whole risk and translation and volume of this particular product. I mean, the margins are in the 40s and the 50s. So in other words, when you're trading this product, there is no such thing as like a lot of people buy. Let's say when you're buying the euro, you might put out 10% of the value, okay, in margin. When you buy this thing, sometimes you have to put out 150%. That's wild, huh? And so that's probably part of the problem is that they can't leverage it very well. All right, let's drift over to the Canadian right there. And as you can see, downwardly pressure, just a teeny little bit. You know, we went into the sell there 2 days ago, and it's just dropping down. So that tells us that there might be a little bit more strength in the oil market. And then what we do is we drift over to the NASCAD right there, the loonie trade. That's the New Zealand, the Kiwi against the Canadian. Or I guess you could say the Kiwi against the loonie. And that's there. And you can see this is rising up. Again, insinuating that the oil market should be firmer. And as you can see on the fact-check spreadsheet, we did close in a daily buy there too. Right there. And we're 18 weeks. We closed in an 18-week buy. This is kind of like a Saturday webinar in a sense because markets are relatively closed. There's just an electronic market for those that have to adjust their portfolios. Let's go over and check that out. Right there. There's Nat Gas looking a little firm. Is that live today? Yeah, it is. Okay, so Nat Gas is up a little bit. And let's see if crude oil must be live also. Now, there you go. Crude oil not is live and is down. Let me just give it a refresh. Okay, there you go. Now the refresh. So it's just up. It's up. Actually, it's up nice, isn't it? So it closed last night. No, that's not right. So they're not giving us a live trade in crude oil, which is hard to believe. Let me just go over and check that out. No, I have crude oil trading up $2 at 61. No, that's right. So what they're doing is they're blending yesterday and today together, and they're not because I have crude oil right now trading at 624 with a bid and offer of 623 at 629. Very thin market, up $2. And you can see they're saying that it settled. Let's see if we can change the instrument data feed and see if we can see a more live action. Matter of fact, is that that's May, right? So May expires in 3 days, 3 weeks, or 2.5 weeks. Okay, or a week and a half. I guess about a week and a half, around the 15th. So let's see what the setting is. See if we can get this thing ticking live. So it's on the default. Let's do this. Let's give it the 7. Oh, it didn't do that either. And that's showing it. Where's that showing it? It's 61.45. And I've got the last trade of 61.24. And interesting. Okay. Let's see if we can change it one more time. See if we can get a live tick out of it. Let's try that. So I want to see where now there's. Yeah, it's not making. It's not making any ticks. So NYMEX may not be trading it. Let's see. That is the May contract. That's right. Yeah. So it's still alive. Hey George, how you doing? That's why people don't trade today. I think they're closed. I think you're right, but I'm getting a bid and offer, and I got a last transaction of 61.24, and they're showing it up $2.08. I wonder. I guess if we went in and take a look and see if we could find out if the bid and offer would change. I got there's 4 contracts bid for, 6 offered. So there must be a quiet market out there. Whereas obviously the currencies are trading a lot more aggressively. Let me see what else is there. I'm going to check out another future. I wonder what the gold contract looks like. Let's see. Let's see if gold is moving around. Now there's gold. There it's on the second. So we have gold, down a little bit. Let's see what parameter that is. That's set on default. All right, let's go back to default on the crude oil. Let's see what happens there. Let's see. Okay, but then what are they showing me on the metals? Let's see. Let's just go to default. Default. Close. Yeah. Okay. Strange. Oh well, that's what it is. I guess, and I can see the bid and offer. It's still 4 to 6. So you're right. It's probably closed, and they're saying it's up 208. So really, the only decent market out there right now is the stock indices and the currencies. And I can see where the grains are not even trading today at all. I have a list, and it said the stock indices and the currencies is the only thing trading, but not the futures contracts, just the spot, which is fine with me. Now that's let me go back to gold. I want to see what that says. So there is gold yesterday settling at 1730 and 1730.3, and then they're showing us some type of action here. Where's it trading at 1721? So it's basically saying it's down today. Somewhere along the line they sold it down. Let's just check out the spot on Dukascopy. And we can look at the spot on the crude oil too. So yeah, they're showing 728 at 729, and they're showing the futures contract at 21, which would make things really screwy to the contango. And then let's take a look at the spot. See what they're showing for spot. There's West Texas now they're showing 61.22 at 29. I got a 29 offer, and I got a 23 bid. And that is. I wonder if we go to an intraday and see what that does, like in 1 hour. And that is there's yesterday, and then there's today. So they have lifted. Let's see, when did they lift that up? So like this is 3 hours ago. It's been up that high, I guess. Is that right? On the GMT time? 20 April. Is that 19? 18? So yeah, I agree with you. Some of the stuff, that's why we don't send charts out. It's so sloppy. Last night's charts are probably the best at this point. And then Monday will make more sense on the charts again. All right, let's go back to the currencies. And like I said, the loonie trade and the Canadian trade say there should be some firmness in the oil. And this is insinuating the same thing right now. And that is right there. They're saying that it's firming up. I guess a growing economy is going to force, not force, but raise prices and demand. I think that's where it really comes down to. All right, let's zip. I get what was kind of interesting was that natural gas showed to be trading. Let me go back to natural gas just for curiosity. So natural gas, right there, right there. Now, was reading that strange article about the swap CFDs and so forth that went on with that family desk. Now, swaps are not allowed in the United States anymore. CFDs, I think CFDs are not allowed anymore in the United States. They've been outlawed, and so the only way you can trade them is over the counter. You can't trade them, and Europe, you can't trade them anywhere else. So it's kind of a demented situation there. I know they're going to do some investigation. I think they lost the numbers. I think I was describing it yesterday. Some of the brokerage houses lost between $2.5 and $5 billion. They're making a market. I don't understand why they're allowed to make a market like that when there's no trading desks anymore, which has really, changed the whole complexion of private investing. So let's drift back to I just want to see one more thing in the energy sector. Let's see what the robo-gas looks like. Yeah, see they're showing a quote on that just a little lower. There's a second. They made some trades in there, and then obviously they're done for the day. I mean, it's not until Sunday, Monday now. And then Europe is closed all the way until Tuesday, Monday night. So it's going to be even more interesting. Whereas we're going to be open and Europe is going to be closed, they'll have to do the over-the-counter thing. All right, let's drift back to the currencies. Let's see what the ruble's looking like this morning. And traders, the few who are here, if you want to see something, let's take a look at it. Just throw it out there, and we'll go look it up and see what's going on. And there's the ruble. And you can see there they are trading it. It's a little bit down or pretty much unchanged. Went into a buy yesterday, lifted up a little bit. We're in a weekly buy, so that's pretty cool. So that's done for the week as far as I'm concerned. All these numbers here now represent these numbers represent the settlement of yesterday. So everything you see there is yesterday, and we don't use today's numbers. They're just too thin to take them serious. And we'll let them blend in on Monday. And then we jump over to the yen. You can see yen just a little bit down, just like the dollar is, just a tad, but closed easily in a weekly buy, and it's in a daily buy, and so there's the strength there. Then we drift over to the Mexican peso. Right there. You see the same thing. Everything's just a tad moved. Nothing major. There's the weekly sell. So it's one full week now on a weekly sell. Finishing off a second week. So it'll be 2 weeks now on a weekly sell. And product is just sideways at the moment, if you want to call it that, tonight or today. And let's see what else we've got going on here. Now, I think that today I'd like to discuss the strange thing that occurred with, let me see if I can find it here. So we get rid of that. And we go with that right there. Let's see, right there. To the swaps. I'd like to talk about what happened with that fund. We're going to bring it up on the screen here. I think it's just like a learning lesson of what is wrong with this particular sector. Why do they do these things? Why do they take the risk? No wonder the banking system is gone. There's nobody there with any brains anymore. If it wasn't for the central banks, this would look like 1929 for the United States. I mean, literally, if it wasn't for the Federal Reserve, which you got to imagine, in 1929 when we had that crash, you got to imagine that must have been very confusing. That we'd only had the Federal Reserve going for about 15, 16 years. And back then, debt was looked at enormously as a bad thing. And so they were trying to preserve the integrity of the financial system. So they allowed all this to play itself out. There was devastation to the public. People who had life savings in banks had lost it, just because the banks went out of business. And so they created an insurance structure, which I was really surprising there hadn't been one, an insurance system to begin with. Instead, the integrity of the name of the bank itself gave comfort to people invested in it or put savings in it, that type of thing. So in other words, it was your good old handshake type of environment. Now, let me go find it right here, right there. And this morning, they've opened up the story: train crashes in Taiwan, killing 40. Oh, that's sad. Russian. Let's see. We're going to find that article, and I think it's well worth. There it is, right there. And here's the article we're talking about. There we go. And we're going to bring this up on the screen. And right there. This is what we're talking about this morning. Since it's a holiday. Oop, how did I do that? No, not there. So, let's see. Where is it at? Right there. This is what we're talking about here. This Archegos built a $100 billion portfolio out of thin air. No, it's not out of thin air. They had, $3 or $4 billion to begin with, to play with, and money came in. I don't see it. It starts off with they're saying this is the worst hit in a hedge fund collapse since long-term capital management. To be honest, I think that they don't really talk about the volatility funds that we saw go out of business back in February and March of 2020 that made the Dow move 1,000 points in every direction for a couple weeks. But I would have to say that I would believe that was the greatest collapse of hedge funds. Now this here is more of I guess they built a $100 billion portfolio, and they made billions of dollars out of it, and then they pulled those billions of dollars out of it, and they paid their they paid their investors, or however you want to describe it, or the family trust, whatever it is, and using these things here, swaps. We're going to highlight some of these: credit default swaps and TRSs. Now I'm going to describe what both of these things are in very simple terms. because they're very simple objects. But the problem is when you're trying to hedge these products, it's a challenge because you take a lot of risk selling these things. In other words, the hedge fund who built itself into a $100 billion fund with just $1 billion or $500 million or $2 billion or whatever, and then did it on top of the profits, takes the less risk, not more risk. The ones who are really taking the risk in the end result is the hedgers, because they take it in the chin at the end, and that's what happened. We understand Morgan Stanley may have lost, between 10 and $12 billion, and Goldman Sachs the same thing, and was it JPM might have lost between $2.5 and $5 billion. That's an incredibly wide thing I've mentioned this week. To be able to take hits like that, they're big numbers. Okay, I mean, when someone says to you, "Oh well," imagine if it's the average person that's listening to this webinar. Imagine that you have an income of say 50,000 euros, or $45,000, and someone says, "Oh, by the way, that investment you made, you lost $90,000." It's like, what? How did I lose $90,000? Oh, you did. Or you might have lost $45,000. That's a big number, when your income is $45,000 a year. You might have lost $45,000, you might have lost $90,000. I mean, that's a big number. So, I mean, these banks lost $2.5 to $5 billion. That's they can only round it out. Just shows you how much of a challenge it is to sell those products to this, family desk, this fund, Archegos. It just shows you how much risk the banks and the providers take to sell them, that they can't even figure out if they lost $2.5 billion or $5 billion, or $10 billion versus $12.5 billion. There's a $2.5 billion slippage there. That's an incredible number. It's just an incredible number. And you're not talking about like, oh, we lost $2.5 billion, or we might have lost $2.6 billion. No, you might have lost double the amount. That's an incredible number. All right. So the risk factor here is something left over before. There's no reason, honestly, there is no reason why anybody trade these creatures anymore. These are things. These are manifestos, or these are concepts. Credit default swaps are from the era pre-listed options. Okay. Same thing with the TRSs. Those things are now what a credit default swap is. Let's describe what it is exactly. Okay. It's not complicated. What you're doing is you're paying for the possible gain or loss in a trading day of the product. So let's say instead you were buying the stock, and the stock is a $100 stock. You put out $100. You're margined $100 to buy that stock, and it's in your portfolio. Instead, what they're doing is they're saying, okay, the stock opens at 100, and let's say the stock opens at $100 and trades to 101 for the day. You're only paying the margin of that $1. Okay, I'm going to say that whole thing over again, because you're going to say, this is insanity. Who would allow stupid things like this? Yeah, exactly. So in other words, a credit default swap is margined to the client who's buying it from the bank or broker who's offering it. They're only risking the $1. Okay, so they try to leverage it. So they're in other words, the buyer or this hedge fund is only being margined $1 on something that has a value of $100. Okay, and they can only gain or lose from the opening and the close of the day. That's what they're betting on. So that's all they're betting on. So in other words, if the stock opens at 101 and they bought the swap that says that they're going to own it, and if it goes up 50 cents, they made 50 cents. And their margin is related to the difference between the opening and the close, and that's it. Can you imagine? You're selling this to this hedge fund. You're a trading desk on a bank or an institution. that offer swaps, like Deutsche Bank. Deutsche Bank at one point, I'm going to drift a little bit, but not really. Deutsche Bank, the largest swap holder or provider, swap provider in the world at one point. At one point, it had $71 trillion worth of swaps. $71 trillion. The German economy is only what? $2 trillion? I mean, you can't even unwind something like that. Imagine if you just have a 1% mess up. You just lost $500 billion on a $71 trillion portfolio. This is the insanity that the regulators allow to go on. Now, in the United States, I'm going to show you a map. Let me just show you something here. I'm going to show you what where it's legal and where it's not legal. Right there. We're going to move this up. Let's see if I can grab it and bring it up on the screen. Okay, so where it's orange, they're banned. So in the United States, they're banned. You're not allowed to do these CFDs, credit CFDs. You're just not allowed to do them. Okay? Banned in Brazil. Look where they're legal. Throughout the Commonwealth and Europe. Or not all of Commonwealth. Yeah, I guess so. There's South Africa, it's legal. And I don't see it in Nigeria. There's Algiers. But so not all the Commonwealth. Australia, Canada, all of the Russian Federation. Oh, no, all of Russia. All of Europe, England. That all the green represents allowed by the regulators, and there in the yellowish, there's no specifics. They have no regulations. Let's see, regulations allowed for regulated firms, so they justify it. They allow it there. China allows it. So the United States and Brazil ban these things. The second largest, this is why Deutsche Bank now, let's move this back down again. This is why Deutsche Bank right now only has a swap portfolio of around 37 trillion now. It's been shrinking and shrinking and shrinking. It's almost 50% down. They're going to let it slowly expire, and when it's done, I can guarantee you, Deutsche Bank will be sold or closed. You take your choice. It'll probably be merged into something. Hey, MGA, how you doing? We figured today, since it's a holiday-ish type day, and we can go look at any currency. Anybody wants to see anything particular, we can go look at it. But I think it's kind of fun today to take a look at these crazy tools that should have died back in the 1970s, going into the 1980s. They should have sized these things out the way they got rid of the New York Stock Exchange. They should not exist anymore. That's the amazing thing, is they still exist. And I have no idea why they exist besides greedy, foolish concepts. I don't know. I guess that's the only way to describe it. There's no way in the world anybody should allow these things to occur. But they do. So we're here today to describe them. And as you can see here, there's the places in the world where you can trade them and where you can't trade them. In the United States, they're banned. And they're banned in Brazil. And in the rest of the world, it's relatively free to trade them. And you got it's an over-the-counter market, which is even worse because it's not regulated. So it says the over-the-counter market in many major trading countries, include the United Kingdom, Germany, Switzerland, Singapore, Spain, all these, Denmark and Netherlands. As for CFDs, Australia, where contracts are currently allowed. It's a lot of risk. The U.S. Securities Exchange Commission has restricted the trading of these CFDs in the U.S., but non-residents can trade using them. It's a really risk factor. There's no reason for it. The binary market that Dukascopy has in options, or the listed options market we have in the United States, can create these same products for enormously less risk and no risk, basically, to the banks, the brokerage houses, the institutions. No reason. It's an anachronism. It's literally, you can use that word. It's an anachronism. It means that it's archaic. Okay, it doesn't belong. It's part of the Stone Age, and in the QE era, it's even more funny that it even exists. I'm sure that's what we're going to see. Since they're not they're already banned here in the United States, and that supposedly the Congress wants to look at that. There's not much they're going to be able to do about it. But that is the one side of it. Now, let's move that down, and let's go talk about the other side of it again. Okay, so now let's look at the other things, the TRSs. Okay. Now, what that is imagine that you're buying, in essence, the dividend. There's products out there that you buy that you only collect the dividend, but you don't take the risk. Let's say it's a $100 stock again, and it has a dividend of, say, 2%. All right, so if it has a 2% dividend, that means it pays $2 a year. It's a $100 stock. 2% of $100 is $2. And so you get a dividend of $2 a year on the stock. All right, what they do is these TRSs, a TRS allows for you to buy the dividend, but not the risk of the stock. So if the stock goes down to 96, you didn't lose $4, you're still getting the $2. Let's talk about that again. So a TRS allows you to invest in getting the dividend without the risk of the underlying product. And so maybe you get $1.70 when the dividend is $2. They'll sell you the dividend for $1.70. They keep 30 cents of it. But they're taking the risk of, if the stock drops to 96 from 100, they lose the $4, or I guess you could say $3.70, because they made 30 cents out of it. See what I mean? It's archaic. Why they allow them to do this in an era where volatility is rampant. I mean, these things made sense on some level. They made sense when volatility was like dormant, pre-1976, where volatility of the markets moved. A stock moved in 1975 or 74. A stock could go, if it was a $100 stock, it might go up like to 101 for the year. It may fall to like 99.5 for a whole year, not a day. Stocks were incredibly docile. All right, they didn't move with any volatility whatsoever. Okay, so the CFDs and the TRSs, they were allowed to function because you weren't really taking on any great risk. Now, let's take a look at this article one more time here. It says, one week after the biggest and most spectacular hedge fund collapse since LTM, long-term capital management, which happened in 94, 95. I disagree. I knew about the one of my partners was doing stupid things, and they got tangled in the long-term capital management thing. Not me. I didn't agree with it whatsoever. Long-term capital management was owned by the former chairman of the Merrill Lynch at the time, who was a world-renowned alleged Winderkin, a brilliant person supposedly. And one of his partners was Shaw, I think, from Black and Shaw, the volatility formula, and had a Nobel Prize in volatility, got in the finance side of it. And so the crazier part of this whole thing was long-term capital was buying, say, old Soviet or I guess Russian bonds in the 90s and selling, say, Greek bonds, and they were trying to do the differential between these type of countries. And obviously the ruble went bananas, and the Russian bonds went out of whack compared to the German bonds and the British bonds and the Greek bonds and the Italian bonds, and all of a sudden, they just collapsed, and the ruble went from like 4 to like 13, and so I think it went to 8 and then 8 to 13, which was a dramatic move. It's like watching the Turkish lira go from 1.5 to 8.5, and so it did it like overnight, and so that. What the long-term capital management was doing is they were buying one 10-year bond, and selling the other one, and trying to do the arbitrage. and they got trapped in it. Now, Shaw used to say, from Black and Shaw, used to say that we were picking up dollars in front of a what do they call it? They have these giant machines when they're building roads, steamroller, okay. And Shaw used to tell investors into long-term capital management. Let's see if we can put a steamroller up there. I'm going to show you what a steamroller looks like. And he used to say, what we're really doing is we are picking up nickels. That's what he really said. Steamroller machine. There you go. There's a steamroller. Let's see. And he used to say we're doing it in front of a big industrial one like this. Okay? Because that's the best way to describe it. So you're a person, you're riding the machine. Let's get rid of that. You're riding this machine right there. You're sitting in there, right? You can see that the wheel is, if it rolls over you, you're dead. You're like a pancake. And he used to say that we walk in front of a steamroller and we pick up nickels, quarters, pennies. And that's all we're doing. And that's what long-term capital management was all about. And they were like I said, they were doing the let's see, I had expected the dollar to rise more after the NFP results. US dollar naturally. Yeah, let's go take a look at it. Let me move this off the screen also. And so, well, here is the let's see what I don't think they're trading the EFP, but let's put it up there anyway. Yeah, they have you can, that's odd. They're actually showing it up for the day from yesterday's close. They are making a quote in it somewhere along the line. So the dollar is actually going up in value, not going down. See, the last couple of days it's been going down. Now, whoop, I'm not sure what that's all about altogether. Right there? I don't even know why that's there. Anyway, let's go take a look at the euro again against the dollar. And you can see here, there's the close of yesterday, and there's the trading live today. So it's actually lower now. The dollar is firm. Exactly. I keep on, when you let me just go to that map again. I want to show you something. The moment I saw the map of legalization of those products, let me minimize that. Let me minimize that. And let's see if I can find it again. It's in here somewhere. I want to see. There it is. Here's the map here. I want to show you this map again. It says a lot about the dollar. I know this is a very odd, convoluted concept, the way Doc is saying it, but let's see. Is it showing up on the screen yet? It should be showing up. You should be seeing it soon. Okay, here it comes. All right, now, right there. All right, now, what does this tell you in many ways? And that is that look where, excuse me, the United States, look at the stock market in the United States, going through all-time highs. The currency is firm, and they're trying to stop this really poor concept of investing. Okay, all right, and you can buy an American bond and get I don't know, where's the rate right now? Let's see if we can put that up on there. We're going to put this up on the screen also. This is why Doc is always saying the dollar is going to be firm, and it's not going to. If the dollar disappears, all the currencies disappear. Probably a perfect reason for the cryptocurrencies in general. Why people want to do the cryptocurrencies? Let's see. Pre-markets. Here we go. I'm going to show you bond yields, and then look at this map at the same time. And I think that it's a perfect example of what's going on. Let's close that. Now, let's see if we can shrink this down. I'm going to minimize that. Let's see if we can shrink this down a little bit like that. And then what we're going to do is we're going to put these two side by side to each other. And this map, in many ways, is a good description of let's see if I can make that bigger. All right, it's like that. Let's see if we can do this. This might look too small for some of you, but let's try doing this. Yeah, okay, right there. So you can see that. Now let's put this up there. Now what we're looking at there is the bond yields and the indices. Okay. Now, look at the Nikkei. The Nikkei up 465 last night, right? All-time high, 39,000. All-time high in the 1990s, like 1992, 93. Okay? For 30 some odd years, it still hasn't been able to get back to the all-time highs. All right? The FTSE, same situation. All-time highs are a couple of years ago at this point. But, come back over to the U.S. and the bonds. Here we go, right there. See them over here? Let's see if you can see them right there. Can you see that right there? Matter of fact, we should probably make that bigger. Let's see if we can make that bigger. There we go, like that. Let's see if that helps out any. All right, now, you can buy a U.S. bond right there. There's the U.S., there's the 10-year bond. It's yielding 1.70, okay? Now, let's see if we can find some of the European bonds. I thought it had European bonds on here. I could have sworn that this has the European bonds on here, too. So, in other words, I wanted to compare it to, say, the Bund out of Germany is yielding, which has the same amount of risk, if not more, is yielding minus 0.31. I just saw it somewhere. Let's see if I can find it again. Why can't I find the German Bund? And I had the Greek. I wanted to show you the Greek one, and I wanted to show you the Italian one, and I wanted to show you the British one. I mean, look at the yield. A 30-year U.S. bond right now yields 2.35. Okay? Now, the whole idea of this, let me see if I can put it on another screen and find them. Let's see if it's just shrunk down. Let's see where we're at. Let's see, world heat map. Let's see if that does it. Let's see what the EU shows us. All right, there's stock indices. There's currencies. There's bond rates. Okay, here we go. Here comes the European one. All right, now, there we go. So the 10-year in England is yielding 0.79. All right, at least it pays some interest, But again, it's taking this type of risk, allowing this type of investment going on with this, the collateralized debts, or not collateralized, the CFDs and the TRSs. They allow that stuff. All right, here's the German Bund right there. A yield of 0.325 minus. Look at the French 10-year, minus 0.078. There's a Spanish bond, 0.32 yield. You get something out of it at a 10-year. And the Italian is at 0.66 at the moment. Okay? And you look at this map and you go, why is that green? Why aren't they stopping this stuff? No wonder they can't pay anything on their bonds, or very little on their bonds. It's because they have their investment community all upside down on the way it functions. Okay? Now let's see if we can find a quote in the all-time high. Let's see if it loads a chart, and we can put like a 10-year chart up or something like that, and see where. Let's see if we can change the time frame. Comparison. No. Okay, there's the Dow. Compare it to that. Maybe it'll put a quote up there. It's not doing that. Let's see. Let me pull this back down again and see if we can find the all-time high in the FTSE. That's what I'm looking for here. The all-time high in the FTSE. Not just a day chart. I want to see a weekly chart. And we know that it's off its all-time highs. And the reason why? This map right here tells us about the irresponsibility of these governments. And I'm not exactly trying to say that this is a responsible government, but thank goodness these things are banned here. See, banned. And that's the whole rationale of what is wrong in the financial community in the world today. Now, at the same time, that gives carte blanche. Let's see. Can you see? What can you see there now? I'll get rid of that. Let's see. How do I get rid of that? Something's wrong there. We want to get rid of this altogether. There we go. Let's see. We just lost it there. Okay, so now let's reopen that up again. And that is the irresponsibility. In the end result, traders, my objective today, take a look at the markets, look at what's going on, and in the end result, basically give you a flavor of the level of irresponsibility. And that map, I'm going to put that map back up again. And that map is a perfect example of it. And that's what the problem is. That is the problem right there. I mean, it's not perfect, the map, because you can say there's probably countries in there doing some responsible things versus others right there. That map, let's see if we can bring this down. Oh, I know why it was so exploded, because we had the size of it. So something like that. And we'll bring that down again. There we go. And that's what the problem is. Those things were allowed to happen last Friday. I guess you could say everybody knew about it in the end, or 2 Fridays ago, I guess now. And that's what the problem is. They're still anachronism, archaic. That's what that's all about. Anachronism is basically archaic. They're still allowing investments to be archaic. And that's why, we look at this map and we go, wow, no wonder there's problems in the world about investing. No wonder they're paying minuses. Trillions of euros, trillions, 17, 18 trillion euros are trapped in a minus investment tool. It's not logical. None of it's logical. In other words, you're not supposed to get a return on taking risk. Well, that means that they're justifying that taking risk is okay for no return. That's crazy. That is just flat out crazy. Okay? And so our title today to this is, I don't know if we can, let me see if I can put a title up in there. So our title today really comes down to is that risk is not respected anymore. That's why they're borrowing and they're taking money and they're doing all kinds of things. Risk is just not risk anymore. That's the problem. Risk is not respected. That's what it really comes down to. And they spend money just specifically because risk is not respected. And traders, you gotta respect risk to be a successful trader. You have to. And that's really what it comes down to. Respected. There we go. Respected. And that's what it really comes down to. And that's really sad. And that's why you see trillions and trillions. You see unemployment high in places. You see no growth in Europe. You see it going sideways. And here we are, no more than almost an hour later after the news came out. What are we looking at right there? We're looking at the euro now lower than before. In other words, the dollar is strong again. And let's take a look at cable. Cable, same way. Just a little bit down, nothing major, but it's the beat goes on. And when we go look at the Swiss and the dollar, it's up now. It's going up. And we're probably looking at the yen. The yen is probably moving up again also. Exactly. Starting to move up now versus that minus. That's the problem, traders. Risk is just not respected anymore. That's what it really comes down to. And it's really sad because they've institutionalized risk in the wrong way. And it's not making the world grow better. It's not allowing businesses to grow. It's not allowing people to have better incomes. It's not giving a future to young people. Instead, they're trapping them with the debt. That's why I'm not a bull on the dollar. I'm just not bearish on the dollar, because I believe at this point that the risk is so great everywhere that if the dollar goes down, it all goes down. And that's what I mean. I'm not talking about price action where it goes up or down during a trading day like this, looking at the dollar against the CAD. It goes up and down, up and down, up and down. No, I'm talking about the idea that cryptocurrencies have grown and are respected by me in particular because the lack of respect of risk in the institutional or government community itself. That's what the problem is. So, all right, traders, we're going to get out of here. This has been Doc from North America. Everybody have a safe and smart Easter. See some of yous on, there is no webinar on Monday because Europe is closed both today and tomorrow. And it was nice to Dukascopy to let me be able to talk about some really important things that are not really discussed anymore. And risk is one of them. We talk about risk all the time here. And we just try to get everybody to understand that risk is an important factor. So, happy trails to you until we meet again after the Easter Sunday, after the resurrection. Happy trails to you, to all our trading friends. Ta-ta for now, traders.